So joining us now to discuss more is Kevin Green, senior markets correspondent for the network. And Kevin, I know that we are focused today on SoFi, but just quick one to also get your thoughts right now on the overall market, because everything is tied, I think, so close to the macro. It's an important discussion.
Yeah, I mean, at the end of the day, what you're seeing is very low liquidity when it comes to these markets. It doesn't take much to really move prices, and we're just looking for news headlines. So we are green for right now. But I mean, Jenny, if you kind of look at those China tariffs that uh, President Trump says he's going to put on, you're talking about 104% in totality there. And I think that's a huge risk, but the market's discounting that for right now. So continued volatility, and we're still seeing even names like SoFi. And I know we'll talk about this here, but it's up 4% in today's session. So you're seeing maybe a little bit of short covering taking place, maybe a little bit of risk on appetite for the most part for now. And when you're kind of looking at SoFi, Morgan Stanley actually lowered the price target for this stock down at $6. Their previous price target was $13, and they have an underweight rating on the shares. Once again, tying it back to the macro. If we do see these tariffs being put in place, that could also slow down the consumer just in general. And these consumer finance stocks might be hit because of that. So they're a little bit more cautious, not only just for SoFi, but just the industry as a whole here. But the market's, once again, bucking the trend, seeing some price movement to the upside, but still a lot of tariff risk in the market, a lot of headline risk right now. So we just got to hold on, and hopefully we see some of this volatility subside here.
Okay, and with a financial, institution and a consumer exposed stock like SoFi here, which is up about 4.4% on the session. I mean, Kevin, what is the risk right now with the economic uncertainty that, obviously still exists for a name like SoFi, but not exactly directly tariff impacted, which is somewhat of maybe its strength?
Well, if prices go higher for the consumers, obviously we might pull back on spending. And if we do pull back on that spending, we could see maybe a lack of liquidity in the market. Also, if we do see stress in the credit market just in general, you might see some of these lenders like a SoFi pull back on their lending appetite. And that also will have this kind of domino effect when it comes to the economy here. So we haven't seen any type of consumer credit cracking right now on the bigger scale. I mean, there's some fractures that are there. And if we do see these tariffs kind of go into place and we have this issue over the next 2, 3, 4 weeks, you can rest assured that we probably will see a blowout when it comes to credit spreads, unfortunately. And that's where it becomes a little bit more of a drawn out economic crisis, not only for the United States, but probably globally. So hopefully we see a little bit of a resolution here, because if not, then a lot of these stocks that have consumer exposure probably will be hit pretty dramatically, and they already have been.
Yeah, to speak to that, I know that we're making a decent move today in the space across the board, but like SoFi, for example, still off of its highs by 46%, while also being off its lows by about 65%. So all these names do remain still, above their 52-week lows, but not necessarily near highs in the least bit. We'll leave it there, though. So appreciate it, Kevin Green, for kicking off this week with us.